low in my ear. Maybe I'm just going deaf. One time I went to an ear doctor because my left ear was so blocked up by what appeared to be, I don't know, like earwax maybe, or like I thought maybe something was stuck in my ear or whatever. They looked at it and then they proceeded to do for like the next 20 minutes to uh in a very annoying fashion spray hot water into my ear to sort of flush out the uh I guess earwax. I guess there was some earwax in there. And so I was kind of pissed off because I'm a musician also, and I was pretty concerned that they were going to fuck up my ear because they were spraying kind of hard. And I'm like, have you checked out what the limits are on that and if it causes hearing loss and like what, pressure you should be spraying that shit at? But this was in um Tijuana when I used to live down there at the beach. So they didn't even speak English, so I really wasn't able to articulate anything too well because my Spanish is just enough. So they spray in the ear out, right? And then they're done. And it's like after someone yells in your ear or something, I feel like, it was ringing and everything. But after that, by God, I could hear so good. It actually worked just fine. I could hear so good. I was like, wow. So I'm feeling like maybe I should go visit one of those places again right now because both my ears just feel a little muted. And it's amazing. It's like you get your highs back, and everything just sizzles. Your ear gets back into sizzle state. Sometimes I'll go to party or an event or whatever, and they have very loud music. And because I'm a musician, I put napkin balls in my ears, try to protect my hearing throughout my old age. Um, so I have really good hearing. So, but right now my hearing's not so good. I gotta go get that flushed out. You guys do that every now and then, like every 5 or 10 years after the age of 40, you probably got to go get your ears sprayed out. And by the way, protect your hearing, guys. Like honestly, like I've done it my whole life because I knew my ears are going to be like very important to me. And whenever there's anything loud, I protect my ears. Although you don't want to be deaf, man. You're like, hard of hearing when you're old. You don't know and then you wear hearing aids, and that makes it worse because then you got to turn up the volume more and more as you lose your hearing more and more. And turning up the volume is making you lose your hearing more and more. It's like, unless you can be happy with like a low volume, you're going to ruin your ears with the thing that's supposed to help your ruined ear, which is the same thing I always tell people, don't put a sweater on. If you're cold, if you're going outside and it's cold, don't put a sweater on because that just makes your body temperature warm. And now the cold feels that much colder. You're much better off just naturally adjusting. I mean, we're not reptiles, but we're warm-blooded creatures, but you get it. You get it. Good morning, everybody out there on all social media platforms. Yes, the stream this morning covering all topics. We've had some earnings releases this morning. We got to check on those. And then the most interesting thing is we had jobs numbers come out. Jobs numbers were they jobless claims have hit the worst level since August of last year. Something like I think it was 231,000 jobless claims, and they're going up instead of the last 3 weeks where 4 weeks over the last month. The last reports that they've been surprisingly coming down. So this is one blip in the wrong direction. But oddly enough, that negative news, the market moved up on it. So um, that's probably very complex dynamic of why that did that. I can't make sense of it. But it could mean something to do with when the Fed is going to raise or cut rates has moved now. the tent pole on that, or whatever you say. And that may have that may change bonds rates, and that may change demand in the market for growth or business somehow. It's just too much for me this morning on a half a cup of coffee. Um, but I'm sure with some further speculation from other peers of mine that I could probably start to triangulate what the fuck is going on, and I'll gravitate towards whatever makes sense. But for now, just remember the market can remain irrational longer than you can remain solvent. So don't try and uh, bet against the market, because the market's always right. The market's what everything is. The market is always right, down or up. Yep, market's always right. So if you want to make money, you follow the market, not what's in your head. What's in your head is delusional. What's in the market is reality. Fucking that could be a $10. Do it at home. Oh, you just did it last week. Helps a lot. All right, Carl. Yeah, well, I'll give that a try before I go visit a professional. So anyway, that's the reaction on the market this morning is positive to the jobs numbers. But when the market opens, I have my skepticism about the fact that those numbers probably add pressure to the outlook right now and to the forecast of things ahead of us. So it's an odd initial reaction, but once the market opens, we might get a better sense of it. And sometimes, well, often in a bull market, for example, bull markets can often have weak opens and then strong closes. So this could become a strong open and will be some indication that maybe we're going to have a weak close, and that somewhere midday or at the close, the trap door of death is going to be pulled out from underneath us. Anyway, I'm fully hedged, so I'm perfectly set up, and whatever it does, it does. That's fine. The market is always right. All right, we've got 14 minutes until the market opens, and what we want to do is just double check there's not any crazy, amazing opportunities this morning, as we always do. Sometimes there's, two, three of those per year, like a DWAC or a Kodak or a GME, those kinds of things. So we take a quick look at those, and we see maybe Sezzle. We just take a quick look. There's the chance of it being so is about 1%. And yeah, this one's no good. Sezzle. AGS up 27%. No, I mean we're looking for a particular pattern, and none of those are are them. All right, so let's see if we've covered everything. 26% pop. Here's a $1.6 billion company, Zlab. Yeah, no, that's not an important or significant price point on Zlab, although good on them. Very good. Yeti. Is that Yeti or Veti? Yeti. Oops, I muted myself. Yeti, not enough liquidity, and also it's still under the 200 moving average, and not a significant change in price. Not a sentiment changing. Not a sentiment change from this new price. AppLovin. Boy, this company just looks. This chart is incredible, and I've been in App several times, and this positive reaction. App is up 13 or 14%. It was at 74 at the close yesterday, and now it's at 84. Hit as high as 86 in pre-market. This looks great. Some of the concerns are that going into the earnings was mostly bought up. So a lot was bought up. However, it looks like about 2 days worth of purchasing was sold off right before earnings here. And so really you have about 3 days of buying at below average prices, pretty much average. So about, is that, I'm not sure if this is in dollars or not. Probably is. So about $750 million of people holding into earnings. And about a third of those might sell half, remember? So that's like a divide by six. So about $100 million to be sold, being taken profit throughout the open this morning. And at $84 a share, that's going to equal, so $100 million divided by $84 a share. Help me do the math, guys. That's 125 million shares. No, I'm way off. $100 million. We're just doing some rough estimations here. 100 million divided by $84 at the open. 120,000 shares expected in selling pressure from people who are taking profits. 120,000 shares. And right now in pre-market, this is app. In pre-market, it's doing 100,000 shares. It normally does 3.4 million shares. It's already done 100,000 shares. That's a little bit light. Okay, so that's a little bit too light of pre-market activity on app as far as volume goes for us to, because of, I've mentioned it before, you need, what happens is about 3 times the pre-market volume you can expect by the close of the day. But you can also do that projection, including the first 30 minutes of the market open, or even 5 minutes, whatever it takes to get you some kind of a figure that's usable and projectable. But we're trying to get to 3.4 million average, and so this is low. So this is not a strong reaction pre-market to app's new price that it should be at. So in other words, the valuation of app has changed because of the fundamentals that were just reported. However, people aren't buying it. Not that they're not literally, then they think it's a lie, the fundamentals, the ER, but they're literally not buying at these new prices so far in pre-market. And 120,000 shares we expect to be sold, unloaded, and taken profit. So probably app is going to run red through our analysis there. But we want to keep an eye on it because we do want to be in app at some point, whether it's today or the next few weeks or a few days. So we do want to keep that on the radar and see how it performs from the open. Other stocks reporting earnings this morning. Carl mentioned Roblox. Roblox was at 39 yesterday. Now it's at 29. It is down 26%. It was actually even worse. Got all the way down to $27 from 39 yesterday. He even hit 40 at one point yesterday. It was at 40. You could essentially say it's at 40. So it's down roughly 30%. It's cut by a third. That's not good. Consumers are not spending enough, presumably consumers are not spending as much as they used to for Roblox services. So that's a interesting mark towards consumer spending sentiment, in addition to just being something interesting on Roblox. Now Roblox was bought up into this release for the most part, except for yesterday. It sold some people got out because they didn't want to run into, they had the run up was enough for them, but many stayed in, and now they're underwater. So this is the beautiful thing that happens, is now they're underwater and it was being bought up, and the way this was being pushed up before earnings release creates a panic sell-off. All these people, including everyone back here who maybe stayed in for that dip and all that, they're going to get hit with a panic, and it's going to create a panic sell-off. So it just depends on the formation going into ER as to how the reaction should be expected for the day. Because in another formation, you could have a gap down like this, a 30% gap down, and it would be bought up and it would be green all day and would move up course, the evaluation of the company would be worse. You can't expect it to be a bullish trade, swing trade or anything. But the point is you can know what to expect. And in this case, the opposite will happen. This is probably going to sell off from the open, or it's going to at least be under pressure. Let's say it goes up. At some point, it might turn around, break the opening price, and then start selling off for the day. It's just going to be under a lot of pressure this down low. If you can end up shorting it, great. I don't know. I don't think that the call credit spreads are going to qualify. I highly, highly doubt it. Maybe. But that's an option, is that you could short Roblox with the call credit spread. What I'm going to do is I'll put it up here on the radar. And then also let's just take a quick look at the options to get an idea whether or not the call side options pay properly. Where's the deltas? What? Okay. As of yesterday, a lot of the options are going to change today, but it looks like it was bearish, lately. So that may not have changed so much. So it looks like about 25% ROC. Is that true? Hold on a second. That'd be great. 9 divided by 41. Calculator taking forever. Come on. I think it's doing a search. What are you doing, man? There we go. Yeah, 22% ROC for a 19 delta. So actually the calls are proportional and they do pay well. I had a suspicion that that could be the case because it was already in semi-bearish formation. So Roblox teed up and set up to be a potential CCS or short. Now let's look at what else was reporting. Anybody else know of any other names or tickers? Let's take a look, and I'm going to pull them up now. Also, we had some lottos that I alerted. Let's take a look. Those lottos were ARM puts. That doesn't mean I expect them. I expect ARM to be down. But yeah, ARM actually did move down, and not too significantly. So there's nothing for us there other than yesterday. I was correct on that one. Beyond puts, and yes, that also worked out. Moved from $8 to $7, down 15, percent. Duolingo ER puts also the same. So that's 3 out of 3. It seems that prices are adjusting in a downward direction on ER releases. 245. Duolingo is down 15%, and it had quite the run up to that release. So there's going to be a bit of panic sell-off going on there, although it does have the 200 and a recent pivot point for support. So there's not quite the blue sky or red hell territory for it to freely roam on as a short. But potentially Duolingo could be a short, although because of the way it was formed, Duolingo, I believe probably the call side options do not pay properly, whereas on Roblox they do. Let's take a look. The 21 delta, 185 divided by, I gotta do this math, 815. Literally waiting for the answer. Can you bring up the calculator or something then? Jeez. Oh, 20. Is that correct? 23% ROC on a 7 and a 21 delta. I just highly doubt that, but all right. It looks like Duolingo also could pay, and you could end up getting a call credit spread on Duolingo. Both of them are going to be under incredible pressure, Roblox and Duolingo. So interestingly enough, we expect App to bleed out, we expect Roblox to bleed out, and we expect Duolingo to bleed out. Those are my lotto alerts that we just went through. We also have Shopify reported. Let's take a look at that. Oh, what a huge drop from 79 all the way down to at 1.62. Oh, that was yesterday. Hold on. Wednesday, today's Thursday. Never mind. That was yesterday. It already reported. Yeah, that was a hell of a day on a hell of a drop on Shopify. Duolingo, Airbnb, Robinhood. What's up with Robinhood? Robinhood did well. Robinhood is up pretty good. And Airbnb, I like Robinhood, by the way. So if that creates an entry, then that's good. I'm gonna put that over here. Hood. I'm already in Robinhood, so I have a Iron Condor that spanned wider than the expected release. Airbnb down 158, down 7%. Moving off into the opposite direction. All right, the market's opening in 30 seconds. Let's see, what did I miss? ARM, Airbnb, Robinhood, there's AMC, Beyond Meat. I mean, we looked at that. Duolingo, Roblox, GCT. GCT, not much of a change. And Plug, I mean, that company just continues to disappoint and get closer and closer to bankruptcy. And yeah, it's down another 5% on earnings. All right, market is open. Let's see what comes up on our grid. And watching everything else, I'll be very curious about price movement. Robinhood is flying right out of the gate. And what is my top side on Robinhood? 2023. Okay. 20 to 23. Make sure that I get out of that top side before it gets too close. I know Robinhood's pulling back now. And where are we? We are 40 seconds into the open. Roblox is actually being bought up on the open. AppLovin is dropping. It is bleeding out, like I mentioned, because there's just there wasn't the demand there. The queues are holding. That's the market for anybody new or whoever's watching. Roblox moving up on this gap down. That could be that a move up. Everybody wants to get Roblox at 30, perhaps. So that's good. But I really do expect once there's any sign of anything bad going on with Roblox, I think that, a lot of people are going to be selling. But for the moment, they're like, let me just see what happens here at the open, and they're letting buyers in. I do believe there's going to be some punching the eject buttons going on over on Roblox. However, this could be a green, never look back 20 delta put credit spread trade potentially on Roblox, and then it's going to try and futz around and fill the gap for the next few weeks. That might be what's happening over there. Okay. AppLovin bleeding out, like we said. Duolingo stable. Robinhood a little bit down off of the open now. Let's take a look at the daily on Duolingo and get a sense for that. Yeah, you would expect a much more panic sell here, but it looks like investors want to stay invested and just take the hit. That's a 17% hit. And it is pretty rare because most capital managers will sell some and reallocate the money. However, it is what it is. Oh, but you can easily hedge with puts, shares. But now Duolingo's red. There we go. That's more like what I expect. I expect Duolingo to be under pressure. But what I was telling you was that we're right here at this pivot level and the 200, which both are supportive levels. So if we break down that it's gonna continue to go down for days and weeks is probably not in the cards. But you could say that it's under pressure. And so that's good for a call credit spread in those situations. Look, it's only been open for 3 minutes here. So I'm not sure I'm ready to commit to that call yet. But anybody else, you're welcome to do whatever you want. This program's educational. You make your own decisions. But I'd be looking maybe to get a call credit spread on Duolingo if that's the way it's going to play out. Let's take a look at the Roblox chart. Roblox chart, hard to decipher which way it wants to go today, but I would expect sell-off. Also call credit spread, but like I said, it's kind of getting bought up here. So, it needs some time to flesh out. Let's see if I've missed anything else. BLBD, ZLab, Yeti, MGNI, SBGI, Fiverr. Fiverr is not even a billion-dollar company anymore. FVRR. Fiverr looks like it probably released earnings. Yes, it released earnings and it was good. However, it goes right into a congestion area and below the 200 moving average changes nothing. There's no trade there. Possibly it could create a put credit spread, but really with the trade idea of it going sideways or being under pressure, you wouldn't go long shares on Fiverr. It's put credit spread only. So I'll go take a look and see if it pays out. Usually it doesn't. Right after earnings can be a difficult time. And also the liquidity on it is looking too low. And the strikes are creating delta skips that are not conducive. So yeah, the spread's way too wide. It's like 30%. And the liquidity on that's not good on Fiverr. EQIX, top of the relative strength this morning. That's just because of how it opened on ER. As far as stocks that are moving strongly from their open, we've got SellH at the top. Yeah, that looks beautiful. Do I have SellH? I would like to get, that's an entry. Let's see if we have enough liquidity here. That's a signal and an entry, a beautiful spot to get into SellH. I hope that it's got the liquidity to be able to get into a put credit spread because I want that. It's kind of only offering the 18 delta at 70. Let's see what that amounts to. Pays 80 for 420, which is, my computer could be a little faster, 19% return on an 18 delta. So that's good. And the win rate on that will be very high. Actually, it's even paying better now, 86, 420. So I'm going to get 4 of those. Try to get to 86 and see if we can get a fill at 86. Obviously, I'm getting the June 21, and that's the 70, 65. Haven't gotten a fill yet. It's right at the right price. So, there we go. Got the fill. All right, I'm in the SellH. Let's draw the line and map the trade out. Right here, June 21, 70 for 86 cents. So the break even will be 69, 14 right there. That's it. That's the put credit spread idea there. What was that other one? So if there's anything I missed, please let me know of any tickers, you guys. Let's stay on top of all these interesting opportunities this morning. That's SellH, top of the market. NRG continues to do amazing. NRG for shares trade. The options liquidity is not conducive, but I still love this stock. NRG, fantastic, great for shares, swing traders. ARM, yeah. On to a lot of these ones, like ARM, for example. We love their charts. This drop recently was not good. But for example, the idea here is that we've just been waiting for their ER to be released. And regardless of if it's a phenomenal ER or not, they could still very well be great put credit spread trades to put on to have sideways, slightly down, or up thesis over the next 24 days. That would qualify for AFRM, I think, reported. Okay, so it's been in this long downtrend. You could see that if you were to get a put credit spread on AFRM, it pretty much matches the speed of the decline. So your capital is going nowhere during that time. But when it moves up like this, like zoop, that move right there, zoop, that's going to hit like almost 100% max profit. So it doesn't take much. If you can draw the line, we could talk about this in class tonight, but if you can draw the line for the put credit spread and it comes out looking, let's say like that, and it matches the angle of decline, then it's actually could be still a good idea, so long as you don't expect any big, huge negative drops. Because it's just like a tender pullback. It's just a soft pullback that's been going on AFRM for a while now. And like I said, all it will take is like this. All it would take is for it to be zigzagging, moving down, keeping you at break even, and then one, two, boom, like that. Even just that alone will probably get you to about 60% max profit right there. And if that's all you get, great. And that's enough usually for your 50% exit rule. But if it then just, did something like this and then like that, now that second time, even though it's the same price, now it'll be like 75, 80% max profit. And now it's getting close to 21 days to expiration. So somewhere in there you would sell, but it just goes to show how superior credit spread trading is to shares trading. If you're trading, if you're investing, obviously you want shares and dividends. But if you're trading, yeah, pretty outstanding stuff. You can't, I can't think of anything else where you can get in and at an angle. Yeah, that's great. AFRM, top of the list, strong reactions this morning. On to the earnings are out. This is nice bullish stock, you see? So this is a perfect scenario where, I mean, okay, it's extended. That is true. Okay. But it's a bullish stock. So even if it's going to go back, like look at this, the idea here. Even if it does go back down, oh, based on prior behavior, the down is just for like a week, so maybe it does this, worst case scenario. Now, let's say you could get a put credit spread. Let's draw that in a different color. Let's make put credit spread green, because it's kind of strange to think this way, but when you're making a put credit spread, credit means you're selling someone something and they're giving you the money. Credit, you're making money. So let's make it green, which because you're going to make money on stock price going up. If the angle of decline on that put credit spread is something like this, that's totally usable. And then simultaneously, here's the very cool thing is right now, the stock is pretty extended, right? So maybe that's going to be a high point, maybe. So there could be some thesis to that you should simultaneously get a call credit spread. And let's draw that in red. And there's a lot of presumptions, but let's assume that the call credit spreads offer this angle, which is almost the same as the other one, right? It's just in the inverse. Well, just looking at that stock and how it behaves, you can see that how price appreciates over time would not be an issue. Like the angle of it, let's say it just took off, right? But it's probably going to do something like this and eventually come under some pressure. And the point is now, or it's going to do something like this, right? The point is, an iron condor is looking pretty good, grabbing a call credit spread and a put credit spread. A put credit spread on the basis that the thing is bullish and strong and should work out, and a call credit spread on the basis of that price got pretty extended recently. It's not looking like it wants to fly right now. So maybe there's going to be a bit of pressure on the top side. And so sell a call credit spread at the same time. By doing that, they call it an iron condor, but all you're really doing is you're getting a call credit spread because that thesis is checking all your boxes. And you're getting a put credit spread. You're getting both because that thesis checks all your boxes. It's kind of strange where you can get two trades on the same stock, opposite trades, and they're both matching thesis and they're both at good points. Sometimes that lines up. And that could be the situation. And the amazing thing is then you're going to get double the return. So instead of 25% ROC, you'll get 50% ROC in 45 days, which is insane. And you're going to get because it's iron condor, it's going to be a price neutral type of trade. So however price moves, one side will benefit while the other one doesn't benefit. And so price becomes neutral. So in other words, you're not really going to see anything too affecting your capital in the meantime. And so long as the thing eventually kind of like ends up inside of that mouth there of that triangle that's opening up, then you're going to get the theta. That's what it's all about. All right, so now let me look at the options. This was an example, an educational example, but now let me look at the options and let's see what the real angles are. And I'll draw those in purple or something. The real angles are, let's go over to onto on the chain. I could probably pop this out if you guys want to see this. There we go. I don't know if you guys want to see this. But we go to onto in the chain. Oh, it doesn't show it there, but the option liquidity is extremely low and non-conducive. It's unfortunate. This was an educational example. I would have wanted that in Iron Condor on it, but I don't think in holy hell we wouldn't want to get in. And the reason is because look at the open interest. It's 10, 13, 9, 28, 21, 17. And look how many options have traded, the volume on the day. I don't know about you, but that looks pretty much like zero to me. None. So it doesn't have enough liquidity. And you have to ask yourself, okay, but does that really affect the bid-ask spread? And you go in there and yeah, you have about a 40% spread between the bid-ask spread on each option. Almost, yeah, 40%. That's way too much. So anyway, closing that down. But for educational purposes, that's how it works, guys. That's what you're looking for. On to DraftKings. See, I have a call credit. I mean, I'm sorry, I have an Iron Condor call credit spread and put credit spread on DraftKings. And so long as price remains under pressure to the upside and supported to the downside, it should, kind of like it's almost like it's set up with these two gravitational forces. There's upside potentials under pressure, downside potentials got a lot of support, so that kind of pushes it towards the middle. And yeah, is it going to wiggle around? Yeah, but as it wiggles around and gets more and more inside of that V, that triangle, the amount of area, almost like if you guys ever did calculus, but like the area inside the triangle starts to become your profit amount. So as long as you stay inside, it gets bigger and bigger and more voluminous. What is that? Per passing day until, you don't hold it till expiration, but you could. It's up to every trader. But our system is to sell at 21 days to expiration or 50% profit. Right on. That's DraftKings, another good example there of what I was just talking about. So I just wanted to continue talking about that for 1 second. All right. GL, this Globe Life stock, having an excellent run back up to its gap down high on a ER, well, on some kind of catalyst prior to ER. It was probably a ER release or a guidance release that was early, dropped hugely, and then it's even on ER had been going back up to fill that candle, but it's probably going to encounter resistance once it gets up there. So there's very little trade left. So neither here nor there. Let's see. Taking a look at anything in my portfolio. Now let's go back to the market, because the market is having a negative reaction. Yeah, the market is selling off now. That makes a hell of a lot more sense with the jobs numbers that just came out. The market selling off. That's why I was saying in pre-market, like, let's just wait, knock on wood. Let's see what happens when the whole market opens, because that doesn't make sense at all. But again, the market can remain irrational longer than you can remain solvent. So you never know. But now this makes sense that the market is selling off. And that looks like this on the daily chart, which is the most important chart to ever read. And so far, but it's so early, only 18 minutes into the session. So this is a pretty decent sign. But so far, we're inside yesterday's range, which means nothing yet. So logically, you should now assume, oh, so when it gets outside, you should always think, what did Evan not say with what he said? What by saying what by what Evan said else could be true on the flip side of that, right? So what it means is that if price gets below yesterday's low, that's bad. And now that becomes, reversal action. And we already knew that though. You know, Carl, you remember like these pivot points on the chart go like this. There it is. Anytime we have a gap open that moves up and then back down and turns red on the day on an extended push, that almost always turns into a top. And you can confirm that the next day with a lower high and a lower low. And so the whole pattern itself is, candle, initial candle, something up here, can be any candle of any kind. It doesn't have to be a doji or, upside down or anything, whatever it is. And then any candle this way, like this. And what you're really dealing with is a higher high that became a lower high and a higher low that now became a lower low. And it creates that reversal pivot point across the whole thing. So that's what we had for 3 days this whole week, Monday, Tuesday, Wednesday. And now Thursday, here we are continuing. We're basically continuing. So we can expect prices to go down and create even a lower low. But what I'm saying is that anytime, but another thing I'm saying is that anytime you have price action that's inside another bar, it's non-existent. It's a phantom. It's a ghost price action. Kind of is, yes, kind of is an island top, yes, Carl. But any price action that's inside another bar does not change anything. So it becomes a nothing. So if price doesn't get below yesterday's low, and today, and price stays below yesterday's high, then by logic alone, all price was contained within yesterday's low and high. And it means that nothing's different. It's like you could erase that day from the chart and let's see what happens the next day. Tomorrow we have consumer sentiment report in the morning. So maybe we're waiting for that. Could be negative. This is just basic price chart reading, pivot points, candlesticks. It doesn't matter what you call them, right, Carl? I mean, it doesn't matter that it's island top. It's nice to have a name. It certainly is a lot easier when there's an island top, but like I just illustrated, it can look like this, and that's you could still kind of call that an island top or a shooting star or an evening star, but it doesn't have to be those patterns, and it's important that the next day do the other thing, but you can kind of predict that the next day is going to be that lower formation because of the pressure that was created with the candlestick that was formed that prior day up higher with that gap open up. And it doesn't have to be the gap open up either. That I should make that clear. It could be like this. The 3 candlestick pattern could be like this. That's also a reversal. Because you have the lower high and the lower low after a higher high and a higher low, and it just creates that V. And this day could be red or green. If it was red, you could really be sure that you're going to be reversing the next day. If it was green, you'd kind of have no idea because higher high, higher high, higher low, higher low, higher high. That's progress in the right direction. So it makes it a little bit more difficult, but it's still a V formation, a 3-day swing high reversal, pivot reversal. Let's see. So looking at our meters, they're mostly red. The market is red. They are mostly red. And so overall, growth stocks remain under pressure today. If there's any opportunities, I'm looking to get in them, and there probably is. Look at this W popped up. Yeah, W, that's a good one right there. Wayfair. You'd have to check the liquidity and the options, but my point is that there's still lots of opportunities out there, and anything that looks like it's hanging in there, even though it's under pressure, could still be good for a credit spread, a put credit spread. Might not be good for a share swing, too much risk there, not enough breakout energy. And you probably shouldn't be doing too much share swinging right now with the market the way it is today. And like yesterday with that doji, the island top reversal. But yeah, credit spreads are still going to be just fine. I'm in, I don't know, I think it's around 30 positions right now and still need to allocate more. I need like another 20 positions. I really want to take advantage of allocating my capital. All right, guys, and Wackis, good morning. Let's go back into the group and stay safe, trade smarter, and I'll see you back in the group. Thank you.